The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 30th wonderful Wednesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Folks, my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, really, when you think about it, it's something you and we must master each and every day. So let's begin our day with empowering beliefs, what I like to call the three forces of life. You know what they are. The three forces in your life, my life, everybody's life, they're knowledge, time, and effort. You know, force number one, knowledge. Today, most of us will have 3 meals and a few snacks. We'll feed our body. But the real question is, will we feed our mind? Here's something you should do each and every day. Set aside $10, $15 for an education fund for your mind. For things like books, workshops, newsletters. Reason being, well, we get a constant flow of ideas. And many of those ideas, well, they'll become an inspiration. You know, the best money spent is the money spent to cultivate the genius of your mind. Yes, folks, feed your mind, for the money spent is a small price to pay for the promise of your unlimited potential. Force number 2, that's time. You see, time, it's simply irreplaceable. And gaining knowledge, well, of course, that takes time. And there's 2 ways to acquire knowledge. You can do it by trial and error, or you can hire a coach, and the coach will teach you shortcuts, one that will compress decades into days for you. You know, each will get you to where you want to go, but one will get you there faster, that's for sure. Many years ago, I stopped with the trial and error thing, for in the end it cost me more in dollars, and I ended up wasting that which I could not replace. That which is time. Hire the best coaches that money can buy, folks, that your money can buy. Force number 3, it's effort. Huge difference between casual learning and serious learning. Effort, well, that's the investment that'll open up the floodgates. Make sure you immerse yourself in that which you are trying to learn out there. Don't give up, folks. If you put forth the effort, light bulbs will go off. Remember, always spend the money, the time, and the effort to achieve your outcomes. Of course, you want to make sure you've got a clear outcome out there, because these are the investments. These are the investments. They'll turn on your lights. They'll start turning your wishes of wealth into reality. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off here. Right now, flat markets out here. Dow off 3, S&P off 3, Composite down 25 points, Russell 2000 off 9, about 0.8% out here. The Energizer Bunny, yeah, I've got my batteries plugged in. It's up 16%, up $15 and change. Log Me In, up $7, up 18%. Aspen Technologies, up 15%. Activist ACT, up about 3%. WellPoint, up 6%. Huron Consulting, up 8%. Level 3 Communications, up 11%. Pepco Holdings, up 17%. Trinity Industries, up 5%. U.S. Silk Holdings, up 8%. Multimedia Games up 14. C.H. Robinson Worldwide up 6. Royal Dutch Shell up 4% out there. Man, some big gainers, percentage and dollar-wise, in the market. That's just the top 10, I believe. To the downside, well, just the opposite. You got big losers to the downside out here. Yep, L on their foreheads out here. Power Integration, POWI, that's the first big loser, down 24% off $14. Priceline getting in on the fray, down $13. That's about 1%. Vistaprint off 20% off $11. Panera Bread down $10, 6%. Concours Technology, CNQR, off 10%. Ultimate Software Group, ULTI, down 6%. VIP Shop Holdings off 5%. FEI Company off 7%. Regional Management Corp down 28%. That's taking it in the shorts out there. Our call number is 877 927-6648. Let's go checking around. It is the end of the month out here. Let's go see what things look like right now in each of the indexes. Maybe we'll take a look at weekly and daily as well. Let's start off with the NASDAQ composite. Let's take a look at weakness out here. Still no bearish signs. First sign of really cracking today from a month standpoint would be a close below 4029.28. That right now it's trading out at 4,080, so that's another 50 points lower. Not that it can't be done. It most certainly can out there. If we see a close below that level, we will not have seen a close below that level. Well, not really. That level is one of the exponential moving average lines that we look at out here. We haven't seen that take place since August of 2011 out there. So that's an area to be watching. Let's go take no reversal candle signals of any other sort out here inside of the NASDAQ composite. Let's take a look at the Dow Jones Industrials. Let's take a look at something that is strong. It's up $3 right now. Let's look for a reversal signal out here. It's not present, not as of yet. That may change after the announcement here by the Fed as they release their minutes sometime right around or they make a statement. They release a statement, right? So that's around 2:15, 2 o'clock, 2:30, somewhere around there. We'll see what kind of fireworks. If the markets move higher, meaning the Dow out here, which would not surprise me at this stage, we'll see what happens. But right now, it's trying to take out its resistance level, which is the highs from January 2014, a close above 16,573 today, and you will have a continued breakout inside the monthly charts for the Dow out here. Hey, if it closes below that, that doesn't mean that it's exactly bearish out here. Just means that it ran into resistance. That's what's going on inside the Dow Jones Industrials. Let's take a look at the NDX 100. It's going to look very similar to the NASDAQ composite. What's the number that it needs to close below? 3471 today before it gives you a potential bearish-oriented, under-pressure type signal. But so far, the monthly chart, not too shabby for the NDX 100. Let's go take a look at the New York Stock Exchange, the wider swath of the marketplace. Several thousand, 4,000 stocks. Is there anything bearish about this pattern out here? Absolutely, positively not. In fact, if we take a look at the low here of last month, the low is 10,272.09. The low of this month is 10,271.36. So any lower close this month would be a key reversal session. We'll want to watch that. What does that mean? That means you need to see a close today below, one tick below 10,538.44. So 10,538.43 and below would actually give you a key reversal session inside the New York Stock Exchange. Does that mean that it's bearish? No, it means that you should be paying attention to it because the New York Stock Exchange, most of the indexes, they don't provide much in the way of key reversal sessions out there. So that is something to be paying attention to. But right now, we're closed right here. It's nothing but long and strong, or strong and long out there, and that's what the New York Stock Exchange is signaling to us. Russell 2000, whole different picture out here. It's off 8 points right now, down 0.7%. It is threatening out here. Well, let's take a look at the Russell 2000. Yeah, a little doji candle last month. That doji creates a resistance. That resistance out here, because it's up at highs, that resistance is now priced at 1280. It would need to close above that in order to get bullish inside the Russell 2000. Right now we can see a lower close this month that says the leaves have been falling off of the trees. Of course, that's just they're getting ready to start growing up in the north out there as they dig out of their long winter that they have had. Of course, there's probably nice buds that are already growing up in your area. Nonetheless, the Russell 2000, that is the weak link, bearish engulfing candle, lower close on a monthly chart inside it. That is telling you where weakness is at out here inside the Russell 2000. Looks even worse if you take a look at the weekly and the daily charts out here. The question is the Russell 2000 going to be strong enough to pull everything with it to the downside out here? And I don't know the answer to that. My instinct is no, it's not. If you take a look at the SOX index on a monthly chart, nothing bearish here. When we take a look at this candle configuration, yeah, closing a little lower than the open of the close of last month, but that's not a bearish reversal signal inside of the semiconductor index. In order for this market to really get bearish, you're going to need to see the SOX index fail And at this stage here, it has not done. A lot of time left in the trading session, but we are closing out the month of April, and so far, so good. Inside the S&P 500, the candle that's formed thus far, it's called the high wave, just means it's lost its way. Right now, at 1876, it's a doji candle out there. That would also just simply set up a resistance level, not a reversal signal. Not until you see how next month's candle signal or to close out here. So we'll continue to pay attention to this. Of course, tomorrow we'll be able to come back and give you definitive answers as to what is going on inside each of the indexes. Let's take a look at the XAU. XAU, that's a whole different picture here on the monthly chart. This thing is still, well, it did on a monthly chart. That's kind of nice, kind of interesting. It did form a little price relative strength divergent pattern. It was making a slightly lower low here. This is the month back in December 2013 out there. You saw a nice bullish candle, nice bullish engulfing bull sash candle. The following month here in January, we've seen resistance here. In order for a real breakout to occur inside of the XAU on a monthly basis, you're going to need to see a close above 102.81, that little dashed line on my screen, which has acted as resistance out here. 877-927-6648. Let's go take a look at the daily chart. You know, we were looking at yesterday or the day before. We were looking at each of the sectors inside the S&P 500 because the S&P 500, no doubt, is strong. It is a lead dog out here. So let's go take a look at the daily charts. Let's go see what we've got going on here today. Let's switch this over to daily charts and let's just see what we've got. Well, I guess I could put up the other. Let's put up the other two. Let's do this instead of that, let's switch over here. Let me switch to a different set of Rhodes Momentum Indicator charts here. Let's do this. This will be a little bit easier because this way we can get a view of the weekly and the, you know what? Let's not do that because the week is not over. Let's not do that. I can't do the monthly. Let's go. We're going to come back here. I'm going to get my act together. We're going to take a look at the daily charts. Let's start off with the top sector. I haven't relabeled mine, but the top sector here being the technology sector, largest weighting structure inside the S&P 500. The XLK, let's go see what it's doing here. Right now, it looks like it's traveling out at about $36.34, unchanged from yesterday's closeout here. Is there anything really bearish about this pattern out here inside the technology sector? There's not, which is why, or one of the reasons why. The S&P 500 is nice and strong out here. Are there resistance points? Oh, absolutely. You got a resistance point here, clear resistance point, a line of where the bears are hanging out. It's the bear sash candle that was formed April 11th. Up the highs out there are your resistance levels inside the XLK. So you want to watch what happens at 36.50 if, in fact, it tries to take on that area. Right now you're trading at 36.34. But as we speak right now, technology sector is long and strong out here. Let's go take a look at the financial sector, the XLF. Let's go see what it is doing out here. XLF is somewhat in what we'll call a neutral zone out here. That's the yellow light. You got to question, are you the type of person that runs a yellow light? And if you are, you can put the pedal to the metal, or do you slow down out here? And this says slow down. So we'll go to Mike in Sarasota. When we get back from this first break, we'll stay inside the financial sector. He'd like to take a look at Bank of America, BAC. Right now, we've got the Dow. It is up 5 points. S&P down 1. Be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Flattish markets in the Dow S&P. Composites off 10, Russell down 5 points. We're going down to Sarasota, Florida. Beautiful area of Florida. Folks, if you ever get a chance to come visit us down here, put Sarasota on your list out there and go take a tour around St. Armand's Circle. Mike, how you doing this morning?
We'll make some good trades before you hit the circle. But
okay. Have you been a resident of Sarasota for long?
20 years. It just keeps getting bigger and bigger. It's like a mini Manhattan or Laguna Beach. It's just
it's a great area, great weather.
Really unbelievable. It supersedes really Palm Beach at this point, and Naples. It's just become the place to be.
Yeah, when I moved down to Florida back in the early 80s out there, and now when it came to restaurants, I don't know if it's still down on the Circle. It was Charlie's Crab. There's a Joe Muir's restaurant up in Detroit.
There a couple days ago, they changed the names around, but yeah, right on the corner.
Okay,
Sit
cool.
Outside, piano player, the whole deal.
Yeah. Very cool. Yeah, beautiful neck of the woods.
You were talking about the. I want to take a look at BAC, but you were talking about investing in the mind.
Yes.
People have a real problem investing in even their bodies. I mean, even in vitamins and nutrition. It's really strange. But besides that obvious thing, people don't invest in the mind. When I see a course in Tony Robbins or a plethora of other people,
Yes.
Abraham, all these, Jay Abraham,
Yes.
I like all these people.
Yeah.
I look at it like an investment, and I want to throw some money into that for my mind. I think when people start thinking they know everything, the growth stops.
Yeah, look, it is. There's no question that the learning curve, between the ages of 0 and 18, you just watch, your kids grow or grandkids or what have you. And if you could, there's no reason to not continue that curve out there. The question is, you're out of school, college, what have you, and so where do you go for education? Now, the cool thing about the internet and things like that, there are so many other areas where you can keep that going. And the markets, talk about the markets. You want to talk about being able to learn each and every day. There's no question about it. So I'm a huge believer in look, I would never ask anybody to do something that I don't already do out there, and I spend at least 30 minutes a day, reading something new, not just reading what somebody's published about some story or what have you, but trying to read something new and learn out there. And there's a lot of folks that they might take a look at a Tony Robbins event, and they just or they watch him, this big guy with big teeth on an infomercial, if he still does those things, and there's a lot of negative thoughts about that. I have to say, until you've done it, and I would never ask somebody to do something I wouldn't.
But you can take anybody down, Steve. You see, this is where people get in trouble.
Oh, sure.
It's like Joel Osteen or whatever. You start dissecting it, and you can find a reason why you don't want to listen to anybody. But you have to say, okay, he's the old saying, I'm the guy on TV, I'm the guy on radio, right? So I might have, I might know something that you don't, just for the fact that I'm here.
Yeah.
And that's what I do. I don't go in as totally naive, but I learn from every single one of these people. I don't care if it's way back at Zig Ziglar, Billy Graham. I mean, you listen to these people and you gather all this wisdom and you put it together what works for you in your life.
No, you do, and much of it is really it's a similar story, just simply told a different way in many instances out there, but you need to hear it a different way sometimes because it just doesn't catch, because then all of a sudden you have like an aha moment or what have you. So I believe it's the best money that a person could possibly spend, which is self-development out there. And you're right. Look, when it comes to nutrition or what have you, that's the cool thing about what Tom has done here at TFNN by expanding the program to include, Nico and Paige's show on Fridays out there, to do the show that he's going to do today, from 6 to 7 o'clock.
You can't do anything. You can't do nothing without that machine, your body, and especially your heart, which is like the base of everything. And yet people that I know that are wealthy seriously spend more time dissecting their vehicle and how it operates and how they can get better performance out of the Porsche than they do their own body. And it's really, I'm not sure, they kind of have that attitude, out of sight, out of mind. Oh, if you don't worry about it, it won't break, type of thing. But that doesn't work.
Yeah. When we get back, we're going to go, actually, folks, we'll take a look at BAC with Mike out there. But usually, in order to get people to take some action, there's some event that has to occur in their life before they get motivated. But we're going to get back. We're going to go back out to Sarasota, talk with Mike. We'll take a look at the Bank of America. Dow's up 11, S&P is totally flat. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're on the line with Mike in Sarasota. We're going to go take a look at BAC, but just in a moment, because Mike, you've spurred some conversation in our Tiger's Den out here. And so you got a lot of folks that are really interested in, in educating their mind out here, looking for classes, looking for new things to learn. They've thrown out really two great resources out here. Khan Academy, great place to go learn about different subject matters out there. That's online if you haven't had a chance to check that out. And a new one out here that I had not also heard of called EDX.org. Looks like it's a consortium of schools, MIT, Harvard, out there, and have a number of courses as well. So you want to take a look at BAC.
As a wonderful thing, the Khan Academy was a profile on
60 Minutes.
And that's a fantastic thing. You know, I have to say one thing, that the young people today really think they know everything and they won't listen to anything, which is really not that different from our generation.
Yes,
What
exactly.
happens differently, though, than our generation is the fact that they've got good reason not to listen to us, because
Hey, watch it. My kids listen to the show. Stop. So well, take that back.
except for you and I.
Okay, all right, good.
The principals right now, the congressmen, the police officers, the doctors, the lawyers, the mayors, the governors, all these people, these CEOs, are setting such a bad example. They don't realize every time they're on the front page with some scandal.
Well, not all of them.
Young people
not all of them. Not all of them. Remember. Not all of them.
There's a little bit out of hand. You know?
Yeah, you remember, the media, the newspapers and everything, they've got to sensationalize things. So I'd say I
understand, Steve, but it is
yeah.
at astronomical levels right now, especially with law enforcement and so forth. It's just going crazy, and the kids are so confused as to who to listen to. You got your Anthony Wieners out there and people like that. I mean,
sure.
Who do you listen to out there? So
sure. Well, look, let's get back to the market out here. I'd love to. We can talk about this stuff all day long, but I know that our listeners want to know what you're doing with BAC. So tell me what you're doing out here and how I can help you out.
I want to get a position again. I made a small fortune or a fortune on it, whatever, back when everyone thought it was going to zero. I just went all in, hundreds of thousands of shares.
Mm-hmm.
And,
okay.
Then
if you want to get back in, I think you've got to be
$5. And what happened was when it went to $5, when it went to $3, I guess back in 2010. I missed the boat. Then a couple of years ago when it hit $5, I'm like, wow, I've got to do this. So I cashed out about 6 months ago, and now I'm thinking about a new position.
Yeah. So, from a longer-term standpoint, and if you go back and you take a look at BAC and you go back to its lows back in December 2011 out at that $5 mark out there, the last time you said, hey, that's about where you got in. If you went down into that level and just simply drew a trend line from the lows of that $5 area, $4.92, December 19th, you touch the next touch point, July 23rd out here, out at about $6.90. That's a trend line. There is the potential that BAC could move all the way down to that area. And the reason why that is such a potential is because of the gap down with volume as it took out a B point of an A to B equals CD to the downside. So at this stage here, to try to buy into it at this stage, I would think you want to see some kind of sign of strength, or you'd like to see some type of pattern complete out here. But I can't see a reason to try to step into this equity right now. At a minimum, Mike, you would want to at least see it test the lows of the 28th. What was that, Monday out here? Out at 1486, and at least reject that area. But it does look like on the daily chart that it wants lower price out here. If I put up the Rhodes momentum indicators for BAC, both for the weekly and the daily, let me see what it is showing. Let's see if there's anything else that just pops out at us. But I just think you need to be patient here. You don't want to give back some of those nice gains out here. Yeah, it's below even the 200-day exponential moving average, which is at 1540 right now. So, you've got longer-term money managers that are taking a look at that, and they're not too enthused, when an equity gets below the 200-day exponential moving average. So I think you've got some time on this before you would step back into it. So
what do you think the next levels down's going to be, down in the 12?
Well, the way that this has come down, it depends what takes place over the course of, let's say, next week. Mm-hmm. The way that this moved down, 1410 and 1344, I think 1344 becomes your target area in that range for where you're looking as a possible entry. Ideally, price gets all the way back to that little trend line out there. Nobody will want it. That's where you bought it last time. I think that's where you'd like to buy it this time, where nobody wants it. The other reason then to come in here would be because you would see some kind of sign of strength. But I think you had a real nice formula for success from a profit standpoint, and maybe that'll work out again for you. I would just be patient on BAC as we speak at this stage.
It is so strange, Steve, that back in that time period that absolutely nobody wanted it. You could go to any financial show or channel that you wanted, and absolutely no one would mention the name.
Sure.
It was the hated stepbrother. No one. They just wouldn't even mention it. It wasn't even on anyone's radar. But I just couldn't see with all the government money pouring in, and I knew it would. It had to.
Look, they were scary. They were scary times back then, for sure. And if you had no technical charting skills, nothing to really benchmark against out there, because one didn't invest in their mind and trying to learn some of those technical tools, and if you just listened on the media shows out there, you just would not have bought. I really remember sitting at a sushi bar in L.A. when Ford was at $1 next to a guy, and he said, "Look, We just got a topic with regard to what we do, and he said, this becomes easy. Just buying the stock is like an option play. Dave Ford was not the one that took any money as part of the bailouts there, and
I had 10,000 shares, Steve, at $1.63.
Smart move.
Nice.
So smart move. Well, Mike, hey, thanks so much for calling. Appreciate you sharing, and have a great day. Have a great week.
Thank you. You too.
You bet. That was Mike and Sarah Soda out there. We were taking a look at, before we took Mike's call, I believe we were taking a look at the different ETF structures inside of the S&P 500 because I wanted to see what was going on out there. So let me try to put those back up on the screen. Let me see if I can find where was the daily chart. No. I don't recall where we left off. Probably was the financials. So there I go. So let's go take a look at the XLV, the health sector out here. Let's go see what it's doing on a daily chart. Well, I think I grabbed the wrong. Did I grab the right chart out here? Yeah, I didn't want to do that one. I wanted to see some other divergent patterns out here. So give me a moment to put the daily chart back up on the screen. Here we go. So let's go take a look at XLV. Right now it's trading up a penny, so it's flat, 58.08. Is the time frame. That's the monthly chart, by the way. There's nothing bearish about the XLV on a monthly chart. In fact, I'll put up the XLK on the monthly chart, too. We'll just put that out here, see if there's any bearish signals. Poof, no bearish signals on a monthly chart. It's forming a doji candle as we speak this month here, but that certainly is not a bearish sign out here. Let's go back and take a look at the daily charts just so we can see what's going on daily-wise inside the healthcare sector. So 58.09 is what it is traveling in. It's just a time to be cautious out here. If it can take out the, it's cautious to bullish, really, quite frankly. What you'd like to see in order to get really bullish on this sector is a close above 58.51. That's a trading session from April 23rd out there. If it does that, then it's giving you all the bullish signals in the world. That's I think that's the third weighting structure inside the S&P 500. Let's take a look at XLY out here. XLY is trading out at which is the consumer. What is that? The consumer discretionary. It's a consumer discretionary, is my recollection. Now this is looking more bearish than bullish as we speak right now. It needs to take out about the 63.80 level in order to get into some form of bullish status out here. So we've had a nice bounce, but it has not really given the full bullish signal out here. That's in the consumer. And maybe the move to the downside was overdone. At this stage, too early to say. That's in the consumer discretionary area. Let's take a look at the XLI. That ticker symbol, let's go see what it is doing. That's the industrial area. The industrials here, that's, even though it's in the cautionary zone out here, it's still looking pretty good, looking pretty bullish. Had a nice hammer low. April 16th, another gap up. On the following trading session, April 17th, little exponential moving crossover. That's a bullish signal out here. It's got resistance at the bearish engulfing candle. That's April the 5th's high, 53.49. You're trading at 52.80, but doesn't look too bad right now. That's the XLI. Let's look at the energy sector, XLE. Let's go see what it is doing out here. So the energy sector, shooting star yesterday. This is interesting. This is very interesting. I see a rising window and a falling window. That means a gap up and a gap down. Let's see if this is an island reversal at all-time highs. I remember we were looking at this yesterday. It was moving higher to all-time highs, big time. So the trading session from April 28th, 93.63. The low of yesterday, 93.79. Okay, so we got a valid gap there. This morning, so we're looking at yesterday's low, 93.79. This morning's, or so far, the high, 93.67. So 67 versus 79. We've got a 12-cent gap out there. So very interesting. The XLE, the energy sector, has formed an island reversal up at the top, along with a little shooting star yesterday. Now, extremely bearish pattern out here. I wonder what ExxonMobil did. Let me pull up ExxonMobil. So that's kind of interesting because that has been on fire. Now it's down about 62%. So it's the leader right now in the clubhouse on the way down. Now the trading session's not over. That gap needs to remain open in order for it to be a island reversal. So no island reversal. You can see the candle formation, how similar ExxonMobil is to the energy sector It did not form a shooting star yesterday, but a candle formation very similar to it. But ExxonMobil did not form. That was what I was first really looking for, was did ExxonMobil form an island reversal candle formation? And the answer is no, it did not. Let me see, CVX. Let's see what that's doing. Chevron out there, and then we'll go back and take a look at the sector. So that's kind of interesting. I would note that in your book today, the XLE. So let's go take a look at the XLP. The XLP. Let's go see what it is doing out here in the marketplace. XLP. That is trading out right now at what? $44.09. Nothing bearish about the about this sector. The XLP is the consumer staples sector out here. So nothing bearish here. It's in a full-blown bull mode out here, big-time bull mode. Let's go take a look at the utility sectors. Well, heck, the utility sectors have been big-time bull mode out here. That got into a nice, on the daily chart, got a nice bullish mode out here back in March of 2014, March 12th. 2014. There's nothing bearish about the utility sector, so you got certainly rotation moving into the utilities out here. And let's finish this off with the last sector here inside the S&P 500, the XLB, building the materials out here. Let's go see what it is doing. And, you know, it's in a cautious zone, only about a 3% weighting structure, but even it has a nice little bullish patterns out here. Nice hammer candle that had formed on April 16th, and some of those hammer candles are going to be key for support. You see markets break down below those hammer candles, and most certainly if you're long, you are wrong. Let's go out to Oklahoma City. Let's go to our man, Nick. Nick, thanks for calling. Thanks for holding. How are you doing today?
Just fine, just fine. Nice Wednesday morning.
Oh, perfect, perfect. You want to take a look at XONE, and that's one of the 3D companies. Is that what that is?
That's exactly right.
Okay. Tell us what you're doing and how I can help you.
Oh, I bought it when it was beaten down, and I was wondering if it has any room to go up now.
Sure. So, it's made a low back here on the trading session of April 16th. Got down into a price level here of about $24.34. It's trading out at $34.40. So it's had a nice move. You've had a nice little, today you're having a nice little bullish crossover. Today is actually confirming a nice bullish mode on this as we speak right now. Let me go see from a volume standpoint where X1 is going to run into some resistance. So when you got into the trade, did you, Nick, did you by any chance have a exit target that you were shooting for that we should look at and see if anything has changed since you got into the trade?
Probably. I'm still hoping that it will get somewhere close to 40 sometime soon.
40. Okay. So that's great. So if we take a look at two potential areas of supply that you're going to run into some problems with, you're sort of getting into that area as we speak right now. And what I'm looking at, Nick, is I'm looking at the candles. This is a daily chart we're looking at. In March 24th, so March 24th on its way down, and this is one of the lighter volume down day sessions it had. The low there is 34.35. You're into it right now. Volume there on that trading session, 628,000 shares. So there's folks that got in on that day, and they wrote it down into that $24 area. And many of them might be saying, hey, it might be time to cash out here. And if you can hold on through the break, we'll go back and we'll just dissect this a little bit further for you. We'll go back out to Nick in Oklahoma City. We're taking a look at X1, where it might run into resistance. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 33 right now. S&P is up 3. Russell 2000 going to turn slightly green here in a few moments. We're going back out to Nick in Oklahoma City. We're taking a look at X1. He's in a real nice trade out there, so congratulations to you, Nick, there. Right now today, folks, and Nick, it's taken out a B point of an A to B equals C to the upside. That is the April 24th swing point high. We're looking at 3380, 380,000 shares out there. So far today, it's done 179,000 shares, so it's got some nice accelerating volume as it's coming through that area. This is going to run into some resistance, or should run into resistance, somewhere between the price level of probably 37.80 to about 40.93. Now, you'll be in some nice profit positions up at that level there. And you'll just simply have to watch. Is volume accelerating as it comes into those areas, or is volume starting to back off? If volume starts to back off, depending on the term that you were looking for on this trade, maybe you want to tighten up your stops, take profits, buy it back on a little bit of a pullback. If volume is accelerating through there, there's no reason for this to not get to a target level in the $48-ish area. But I would, I'd try to stick with your original game plan and just monitor volume out there. But is there something specific that you were looking at that maybe I've overlooked and I should look at with you as well?
No, I just felt that the whole sector was hit severely,
Yes.
oversold, and
Yes.
now I think it's kind of recovering, and only time will show. But yeah.
Yeah, no, you're in a good trade as we speak right now. So keep a stop in place so you're protected on the downside on anything that happens out there, and just keep monitoring it on the way up out there. Just manage the trade, and you're in good shape.
Absolutely.
Yes.
Yep. You are great. Thank you.
I think you're great. You're great. So thanks so much for saying that.
No,
but
I wish.
You're the one that's great. Have a great day, and thanks again for listening and calling. So, folks, as we end this session here with a couple of minutes, let me give you what I believe is the read on the markets out here. It's not my belief about what the markets are doing. It's just simply my read on what the markets are doing, and we're neutral. So I'm neutral. I'm neutral ahead of the Fed announcement here at 2 o'clock. However, everything that I'm looking at says that this market is going to respond positively to whatever it is that the Fed has to say. Summation index in the New York Stock Exchange, it's on the way up. It ticked up yesterday, just as we thought that it would. The euro-yen, it's kind of irrelevant as we speak right now. It's inside a wedgie pattern out there, and it's not doing a whole lot. So I kind of give that a neutral. The VIX index, it's trading below the 50-day exponential moving average. It's trading up a little bit right now. It's up 46 cents, 0.6% out there, but it's in the bullish zone as we speak right now. So you could expect a little bit of the jitterbug move, which is going on right now, but it's still below the 50-day exponential moving average. That is bullish out there. You've got the maybe it's actually a little bit lower. It wasn't up 46 cents. Must have been something else I was looking at. You've got, quite frankly, the NASDAQ, NASDAQ 100, the composite. Its oscillators turned up yesterday. It actually turned into a bullish mode yesterday out there. That doesn't mean that things can't totally reverse. It is a Fed day out here, and so we'll just see how the markets. But as we speak right now, I think neutral is a nice position to be in. And then if the market breaks out to the upside here, I don't think that it'll be a one-hit and a one-day wonder. We got sell in May coming tomorrow. That's just too easy. And I just don't see it as we speak right now. I'm willing to change my mind. It's going to be the charts and the markets that'll change it for me, though. We'll see what happens tomorrow. Stay tuned. Our man Basil Chapman is up next. It is Wonderful Wednesday. Have a great Wednesday, folks. Thanks so much for joining me. Look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.